Since we are nearing the end of our 2024 financial year, let's review what just happened behind us. In 2023-24, the start of the financial year, the Indian stock market initially faced a downtrend, but later experienced a significant rally with Nifty achieving a year-to-date return of 18%. Mid and small cap stocks obviously outperformed, yielding returns of 40 to 50%. Average mutual funds are up 30%, 35%. The market witnessed the launch of 57 mainboard IPOs, and sectors such as defense, realty, auto, public sector, enterprises, and pharma, they stood out as the major performers. While new age businesses presented a mixed picture. Most of the credit of this rally goes to the domestic funds and HNIs, which were backed by unabated retail flow, with the SIP book breaching all records and clocking the highest ever monthly flow of 17,000 crores every month. Average market cap of the so-called dead PSUs has grown up threefold in the past year. India became the fifth largest economy globally during the last year and also the fastest growing, despite concerns about the global concerns about recessionary pressures in other developed economies. The Reserve Bank of India raised its repo rate to 6.5% in February. The Federal Bank raised its interest rates. Just recently, they have stabilized. All this on the back of two wars coupled with international recession and Red Sea crisis. New age capital guzzling companies are attracting investors in primary as well as secondary markets. This was unheard in India. This used to be a unique American phenomenon. Just a couple of years back, this sort of businesses have been looked upon by investors as doable and investable. Indian investors are okay with investing in loss-making stocks, fintechs, and e-commerce companies, which actually they don't understand much about. But yes, Indian SME entrepreneurs have become more open-minded. They are wanting to come into mainstream, the entrepreneurs, the small medium enterprises. They are wanting to come into mainstream. They want to reduce their cash transactions, bring all their transaction in their books, and give up their dear equity for strategic alliances or fundraising. Now, this was also not the phenomenon of Indian promoters in the past. On the back of various government policies, India is now producing for self and becoming an exporter of products which are related to consumer electronics, processed crude, and precision engineering components, for which just few years back we used to be a net importer. There's a sea change. From monetization initiative of ISRO to efficiency increase of the PSUs to companies speaking about being net carbon zero, for sure, India's fundamentals as a country is on track. Now, whether all this is priced in at the current market levels or not, that is a subject matter for another long video.